Hey guys, welcome back to the channel. This is Courtney with the Flex Financial Trading Group. If you're stopping by to the channel for the first time, definitely consider subscribing, hit that notification bell. We appreciate you stopping by and checking us out, and appreciate your support as we're continuing to put out videos and work on growing our YouTube channel. And today, for today's video, I want to talk about options trading. So a lot of people have been getting into options trading, especially since the pandemic. There's like this big boom of retail traders getting into the stock market, and options was all the craze, right? So most people like options trading because you don't need a lot of money to start trading options, and you can generate some good returns with your money if you're doing the right things in the market with options, right? But what a lot of people don't realize that are new to options, there's a lot of different nuances and different variables that come with options trading that you don't necessarily have to deal with when you're trading actual shares of a stock. So you got to be aware of those different factors and different variables that come with options trading. And you should definitely have a solid understanding, a solid foundation on how options work before you start trading them, because otherwise you can get yourself into a lot of trouble. I've heard a lot of horror stories of people trying to trade options, right? So you got to definitely know what you're doing first. And one of the most important and the most basic things about options that you really got to understand before you get into them is you got to understand that time is always working against you when you're trading options, because every options contract has something called expiration date, right? So they're not endless or timeless like stock shares. They have expiration dates, cutoff dates, and when those option contracts are no longer valid. And I like to say they're like ice cubes, right? So if you put an ice cube in your hand, you stand out in the sun and hold that ice cube, the longer that you hold that ice cube, it's melting away. Eventually it's going to melt and turn to nothing. That's how options contracts work as well. The longer you hold them, they lose value every single day. And if that stock isn't making the move you need it to make, then that option is quickly on its way to zero. So that leads me to really the point of today's video. I want to talk about why you are losing money trading options, or why you might be losing money trading options, and some of the things you can do about that to fix it, right? So the first reason that you might be losing money trading options is because you're trading with too big of a position size, meaning that you're buying too many option contracts at once. And a lot of times most people do that because you're trying to hit the home run, you're looking for these big profits, these big returns on the money that you're putting into the options trade, and you're buying too many contracts at once. But you got to realize that for every small move in the stock, either direction, there's a magnified move in the options contract value. So trading with too many contracts can kill your risk management. And if you're having consistent wins trading options, that one loss, if you're trading with too many contracts, can really eat into a lot of the profits that you're making, right? So you got to be careful trying to buy too many contracts at once. And this is easy to do because in comparison to stock shares, option contracts, they're smaller in price, so you can buy a lot of them, right? And a lot of people get caught up in that. So you got to remember, it's not the dollar amount that's the issue. It's that trading with too many contracts can put yourself into a bad situation very quickly. If you can't get out of those option contracts, if the liquidity is not there and that stock makes a move and you miss it, you can't get out of it, then that can put you in a bad spot, because option contract values move very, very fast. Again, there's a magnified move in the option value compared to the move in the stock. Second reason you're probably losing money trading options is because you're not paying attention to expiration dates. Now, this is a very common mistake for beginners that are option trading. And the expiration date of the contract, I said that before, is one of the most important factors to consider before you're actually buying an option contract. And once you're in a contract, you don't want to forget the expiration date. So once you buy those contracts, you got to make note of that. And most beginners focus too much on the cost of the option contract itself. They focus on the strike price, and they don't pay enough attention to the expiration date. And a lot of beginners that ignore the expiration date, when that trade isn't working out in your favor, you let that contract expire, and if that contract expires out of the money, then you're at risk of literally losing 100% of your money, 100% of your investment, all of the money that you put into that contract, right? So you got to pay attention to those expiration dates. That's very important when you're trading options. You got to know that, and so you can manage that trade properly, right? The third reason you're losing money trading options is you're buying cheap options. And as the saying goes, you get what you pay for. And that applies to the stock market, that applies to options as well. And there are reasons to buy some cheaper option contracts when they're further out of the money. But you really, when you're trading options, you don't want to go too far out of the money. And a lot of beginners like to go really far out of the money because they like the idea of buying low price options. But the problem with that is, since the options are so far out of the money, the stock has to make a huge move, a significant move, in order for them to make any money on those contracts, right? So you want to be careful of buying those cheaper options. It's better to go near the money or in the money when you're trading options. That way the stock doesn't have to make a significant move, a huge move, just for you to make any profits, right? And then the final reason you're probably not having good success and not making any money trading options is because you don't have a real clear strategy. You don't have a clear plan for what you're doing with the trade. I'm here to tell you, hope is not a good strategy, right? I tried that strategy when I first started out trading options. It doesn't work. No matter how much you hope, no matter how much you wish, no matter how much you pray, you can't make that stock go in the direction that you want it to go. Again, believe me, I tried it. I'm speaking from experience. So when you're trading your options, you got to stick to rational decision making, right? You got to take emotion out of it, stick to rational decision making. When a trade is not going in your favor, you got to know when it's time to actually exit the trade, not give in to the emotions, and hope and wish and pray that stock is going to turn around in your favor. Because if you do that, I'm here to tell you, it can absolutely lead to huge losses. And some of those losses you may not be able to recover from. So you got to be careful of that. Have a clear strategy with what you're doing. Remember, when you're dealing with options, time decay, again, time is always working against you. The longer you hold that option contract, that stock is not moving in your favor, the more value that option contract is going to be losing on a daily basis, right? So now that we identify some reasons that you're not having success, some reasons that you're probably losing money trading options, let's talk about what you can actually do about it, right? We're going to help you out today. So the first thing that you can do is you can lower the number of contracts that you're buying in a single trade. Stop swinging for the fences, right? You got to control that greed gene. I know there's a lot of noise out there. People are sharing the profits. You feel like you're missing out, but you got to control that. Lower down your position size. Appreciate those smaller, consistent wins. Those are going to take you a lot further than swinging for the fences in one trade. I'm here to tell you, I've been trading for over 10 years and counting. I'm here to tell you those consistent wins will take you a lot further. And also, they'll allow you to manage your risk much better, right? So if the stock goes against you, you don't have to worry about taking these huge losses because you're trading with a smaller position size, and you're focused on those smaller wins, right? Consistent smaller wins is the name of the game. Second thing you can do to help turn your options trading around and start making consistent money is you got to pay close attention to the expiration dates in the contracts that you're trading. And again, expiration dates, one of the most important elements of an option contract. Every day that you're holding that contract that is losing value, getting closer and closer to the expiration date, is going to be losing money very quickly. So don't put yourself in bad position, being complacent with the expiration date, not paying attention to that, because that is probably the most factor of the option contract. Third thing you can do to help out your options trading is, instead of buying cheaper options, you got to consider digging a little deeper into those pockets and try buying options that are near the money or in the money, right? Also, to help with that, you can consider trading leaps options, which are longer dated options. They expire a year or further out, and they give you more time to be right about the direction the stock is headed, and you're getting time on your side, right? So don't be a cheapskate when it comes to options. Stop trying to buy all these cheaper options and go dig a little deeper. And if you need to build up your account a little bit first and contribute some money to your account to build up your trading capital. You're going to be better off doing that versus trying to buy a bunch of cheap options right off the bat, right? Then the last thing, you can learn some lower risk option strategies to start implementing in your trading. Okay, so this was an eye opener for me when I really started learning about options. Getting into more lower risk trades was the best thing that I considered doing. One of those trades was cover call writing, learning how to sell calls instead of buying those shorter dated calls, selling calls for income. Option spreads, another low risk strategies that you can use with options. Bear call spreads is a great trade to learn, especially in this market environment. And then, of course, I mentioned leaps before. Leaps trading, leaps volatility trading, trading those longer dated options, getting time on your side will help you have a more of a lower risk approach when it comes to options. All right. So I just want to help you guys out today. That's it for today's video. Try some of those tips out when it comes to your option trading. I guarantee you they'll help you improve. Comment below. Comment your thoughts on this video, whether you agree or disagree. Definitely would just love to hear your thoughts and your opinion when it comes to options trading, what you think. And again, hit that like button, share this out with other people that are trading options. If you think this will help them, hit that subscribe button, hit the notification bell. Thanks again for tuning in today, and we'll catch you guys on the next one. You guys have a good one.